ExamPrep.School. Wyoming Accident and Health or Sickness Producer, exam code 12WY02. There are 4 practice exams in this series. This video covers Practice Exam 1, which is free. In this video, we will be covering the following major categories for Practice Exam 1. Field underwriting procedures, other insurance concepts, policy provisions, clauses, and riders, social insurance, types of policies, Wyoming statutes, rules, and regulations, accident and health specific, Wyoming statutes, rules, and regulations, common to all lines. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Identify the definition under which an insured would receive full disability benefits if unable to perform the substantial and material duties of their specific occupation, even though capable of other gainful work. A. Residual disability definition. B. Any occupation definition. C. Own occupation definition. D. Presumptive disability definition. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like, longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The own occupation definition pays full benefits when the insured cannot perform duties of their specific occupation, regardless of ability to work in other jobs. Reason A is not correct. Residual disability definition covers partial losses and reduced earnings, not full benefits for total inability in own occupation. Reason B is not correct. Any occupation requires inability to perform any job suited by education, training, or experience, so it's not triggered by loss of one's specific occupation. Reason D is not correct. Presumptive disability covers predefined conditions, e.g., loss of sight, not inability to perform one's own occupation specifically. Question 2. When a policyholder selects a longer benefit period for a disability income policy, which outcome is most likely to occur, assuming all other factors remain constant? A. Elimination period automatically lengthens proportionately. B. Monthly premium increases commensurately with the extended benefit duration. C. Covered injury definitions expand beyond standard terms. D. Policy converts to guaranteed issue upon renewal. The correct answer is B. Extending the benefit period increases the insurer's risk exposure, resulting in a higher monthly premium. Reason A is not correct. The elimination period is independently selected and does not change automatically when the benefit period lengthens. Reason C is not correct. Benefit period length does not alter the scope of covered injuries or definitions. Reason D is not correct. Converting to guaranteed issue status relates to policy terms at renewal, not benefit period selection. Question 3. Under a business overhead expense disability policy, which of the following operating costs is typically reimbursable while the business owner is totally disabled? A. Owner's personal salary draw. B. Rent for business premises. C. Principal payments on business loans. D. Costs for new equipment acquisitions. The correct answer is B. Business overhead expense policies cover overhead items like rent and utilities, but exclude personal or capital expenses. Reason A is not correct. Owner's personal salary draw is considered personal income, not an overhead expense. Reason C is not correct. Loan principal repayments are capital or debt service costs, which are not covered. Reason D is not correct. Equipment acquisition is a capital expenditure and not reimbursable under overhead expense coverage. Question 4. In a disability buyout policy, which event typically triggers payment of the lump sum benefit to fund the buyout agreement? A. Insured's voluntary resignation. B. Filing of bankruptcy by the business. C. Insured's total and permanent disability. D. Temporary medical leave of absence. The correct answer is C. A disability buyout policy is designed to fund purchase of business interest upon an owner's total and permanent disability. Reason A is not correct. Voluntary resignation is not a triggering event under a buyout disability policy. Reason B is not correct. Bankruptcy of the business does not directly trigger the disability buyout benefit. Reason D is not correct. Temporary leave is not considered total and permanent disability, so it does not trigger payment. Question 5. Acme Industries pays 100% of the premiums for its group long-term disability income policy covering employees. From the employer's federal tax perspective, how are these premium payments treated? A. Deductible as an ordinary and necessary business expense. B. Non-deductible personal expenditures. C. Capitalized and amortized over the policy's life. D. Deductible only up to a percentage of payroll costs. The correct answer is A. The correct answer is that employer-paid group disability premiums are deductible as ordinary and necessary business expenses under federal tax law. They are not personal or capitalized expenses, nor are they restricted by payroll-based limits. Reason B is not correct. Payments are not considered non-deductible personal expenses because the policy benefits the company's business operations and employees. Reason C is not correct. These premiums are expensed immediately rather than capitalized and amortized over the policy's life. Reason D is not correct. There is no payroll-related percentage limit on deductible disability premium expenses under federal tax rules. Question 6. Jordan is comparing individual disability income elimination period options of 30 days, 60 days, and 90 days. If Jordan elects the 90-day elimination period instead of the 30-day option, what will happen to the monthly premium? A. It will decrease because the longer elimination period reduces insurer risk. B. It will increase because benefits will accrue earlier. C. It will remain the same since elimination period does not affect pricing. D. It will decrease, but the benefit amount will also be proportionally reduced. The correct answer is A. The correct answer is that a longer elimination period delays benefit payments and lowers expected insurer liability, which reduces the premium. Elimination period length does not directly alter benefit amounts. Reason B is not correct. Premiums do not increase with longer elimination periods, since delaying payments lowers insurer risk. Reason C is not correct. Elimination period length directly impacts pricing, so premiums would not remain unchanged. Reason D is not correct. Benefit amounts are not proportionally reduced by changing the elimination period. Only timing of payments is affected. Question 7. Under a major medical insurance policy, what principal distinction exists between a lifetime maximum and an annual maximum benefit limit? A. Lifetime maximum resets each policy year, while annual maximum applies over the insured's entire coverage period. B. Annual maximum is unlimited, and lifetime maximum resets upon policy renewal. C. Lifetime maximum only applies to inpatient services, while annual maximum applies to all covered services. D. Annual maximum caps benefits paid in 1 year, whereas lifetime maximum caps benefits over the entire policy duration. The correct answer is D. The correct answer clarifies that annual maximum limits the insurer's payment in a single year, whereas lifetime maximum limits total payments over the entire coverage period. Reason A is not correct. This misstates the definitions by reversing which limit resets annually and which accumulates over a lifetime. Reason B is not correct. Annual maximums are finite dollar limits and do not become unlimited upon renewal. Reason C is not correct. There is no service-based distinction. Both limits pertain to total benefit payments regardless of service type. Question 8. Which feature characterizes network utilization in a preferred provider organization, PPO health plan? A. Coverage is denied for services rendered by out-of-network providers under any circumstances. B. Preventive services are only covered if delivered by in-network providers with prior authorization. C. Members must receive specialist referrals exclusively through a primary care physician. D. Higher cost sharing applies when using out-of-network providers without requiring a referral. The correct answer is D. The correct answer describes that PPO plans allow members to use out-of-network providers with higher cost sharing and typically do not require referrals. Reason A is not correct. PPO plans do provide some coverage for out-of-network services, though often at lower benefit levels. Reason B is not correct. Preventive services often have in-network coverage without additional prior authorizations in PPO plans. Reason C is not correct. Requiring referrals exclusively through a PCP is characteristic of HMOs, not PPOs. Question 9. What is the primary role of the gatekeeper in a health maintenance organization, HMO plan? A. Manage referrals by coordinating specialist care through a primary care physician. B. Negotiate hospital and specialist fees on behalf of plan members. C. Set benefit limits such as annual and lifetime maximums for enrollees. D. Authorize any out-of-network care before it is covered by the plan. The correct answer is A. The correct answer explains that the gatekeeper coordinates access to specialists by managing referrals via a primary care physician. Reason B is not correct. Fee negotiation is performed by the plan's contracting department, not the gatekeeper. Reason C is not correct. Benefit limits are established by policy terms and underwriters, not by the gatekeeper. Reason D is not correct. Gatekeepers do not typically authorize out-of-network care. They control in-network referrals. Question 10. In a point-of-service POS plan, which rule applies to in-network specialist referrals? A. Prior authorization is required from the plan administrator before any specialist visit. B. Referral requirements apply only to out-of-network specialists, not in-network providers. C. Specialists within the network may be consulted without any formal referral if the member pays cost sharing. D. A referral from the primary care provider is required for full coverage of in-network specialists. The correct answer is D. The correct answer identifies that POS plans require a primary care provider referral for full in-network specialist benefits. Reason A is not correct. Prior authorization is different from referral and is not universally required for in-network specialists. Reason B is not correct. Referral rules usually apply to both in-network and out-of-network services in POS plans. Reason C is not correct. Even with cost sharing, a formal referral is typically needed for full in-network benefits. Question 11. An employee enrolled in a self-only health plan with a $1,400 annual deductible and a $6,000 out-of-pocket maximum asks whether she is eligible to contribute to a health savings account under current IRS rules. Does this plan qualify as a high-deductible health plan? A. Yes, because the out-of-pocket maximum is below the IRS limit. B. No, because the deductible is below the IRS minimum threshold. C. No, because the out-of-pocket maximum exceeds the IRS limit. D. Yes, because the plan meets both deductible and out-of-pocket criteria. The correct answer is B. The IRS defines an HDHP by its minimum deductible. Since the deductible is below the required threshold, the plan does not qualify for HSA contributions. Reason A is not correct. Having an acceptable out-of-pocket maximum alone does not satisfy the minimum deductible requirement. Reason C is not correct. The out-of-pocket maximum is within IRS limits, so that is not why it fails HDHP status. Reason D is not correct. The plan fails the deductible criterion, so it cannot meet both requirements. Question 12. At year-end, an employee has a $700 balance in her employer-sponsored health, FSA, and the plan allows a carryover. Under IRS rules, what is the maximum amount she can carry into the next plan year? A. $0. B. $500. C. $610. D. $700. The correct answer is C. IRS rules permit up to $610 of unused FSA funds to be carried over. Any amount above this limit is forfeited. Reason A is not correct. The plan allows carryover, so the balance is not fully forfeited. Reason B is not correct. The limit is higher than $500 under IRS rules, so more can be carried over. Reason D is not correct. You cannot carry over the entire balance if it exceeds the IRS maximum limit. Question 13. According to the standardized Medicare Supplement Plan G benefit chart, what is the maximum lifetime limit for emergency foreign travel coverage? A. $60,000. B. $50,000. C. Unlimited. D. $100,000. The correct answer is B. The correct answer is $50,000 because Standardized Plan G foreign travel emergency coverage provides 80% coverage up to a $50,000 lifetime maximum. Reason A is not correct. This value exceeds the standardized lifetime maximum for foreign travel emergency coverage under Plan G. Reason C is not correct. Plan G does not provide unlimited foreign travel emergency benefits. Reason D is not correct. The benefit limit is lower than $100,000 under Standardized Plan G. Question 14. Under Wyoming regulations, a Medicare supplement, Medigap applicant's open enrollment period begins on which day relative to Medicare Part B coverage? A. The date that Medicare Part B enrollment is approved. B. First day of the month in which Part B coverage becomes effective. C. First day of the month following Part B effective date. D. Date the Part B premium is paid. The correct answer is B. The correct answer is the first day of the month in which Part B coverage becomes effective, as Wyoming law ties the Medigap open enrollment start to that calendar date. Reason A is not correct. Approval date is not used. The regulation specifies the calendar month of Part B effectiveness. Reason C is not correct. Enrollment does not wait until the following month. It begins in the same month. Reason D is not correct. Premium payment date does not determine the open enrollment start under Wyoming rules. Question 15. Which statement correctly distinguishes the elimination period from the deductible in a long-term care policy? A. The elimination period resets each calendar year, whereas the deductible applies only once per lifetime. B. The elimination period refers to the total dollar threshold to be met, while the deductible is a period of days before coverage starts. C. The elimination period is a time-based waiting interval before benefits begin, while the deductible is a dollar amount subtracted from each reimbursement. D. The elimination period is waived if the insured pays the full benefit, and the deductible reduces daily benefit amounts. The correct answer is C. The correct answer is that the elimination period is a specified number of days before benefits begin, and the deductible is a fixed dollar amount deducted from each claim payment. Reason A is not correct. The elimination period does not reset annually, and the deductible is not a one-time lifetime amount. Reason B is not correct. This description reverses the definitions of elimination period and deductible. Reason D is not correct. The elimination period is not waived by paying benefits, and the deductible does not reduce daily benefit amounts. Question 16. Margaret holds a guaranteed renewable long-term care policy. After paying premiums for 5 years, she receives notice that her premium for the coming year will increase. Margaret asks her agent which insurer action is permitted under the guaranteed renewable provision. Which statement is correct? A. Premiums may be increased for all policyholders in her classification on a uniform basis, but policy benefits cannot be changed. B. Premiums may be increased only if she submitted a claim in the preceding policy year. C. The policy may be non-renewed once she reaches a specified age at the next renewal date. D. The insurer may reduce benefit levels if aggregate claims experience exceeds expectations. The correct answer is A. The guaranteed renewable requirement prevents cancellation or benefit changes while permitting premium rate adjustments on a uniform, classification-wide basis with proper regulatory filing. Reason B is not correct. Premium increases cannot be tied to an individual's claim history. They must apply uniformly across the classification. Reason C is not correct. Guaranteed renewable policies cannot be non-renewed based on the insured's age as long as premiums are paid. Reason D is not correct. Benefit levels are fixed in a guaranteed renewable contract and cannot be reduced due to claims experience. Question 17. A cancer-only insurance policy often uses a benefit schedule that lists predetermined dollar amounts for each covered service. What term best describes this type of benefit design? A. Indemnity reimbursement. B. Disability income structure. C. Scheduled benefit design. D. Expense incurred coverage. The correct answer is C. The correct answer is scheduled benefit design because it specifies fixed dollar amounts for each service rather than reimbursing actual expenses. Reason A is not correct. Indemnity reimbursement pays for actual expenses, not fixed schedule amounts. Reason B is not correct. Disability income structure provides income when disabled, not service-specific benefits. Reason D is not correct. Expense incurred coverage reimburses actual costs rather than using predetermined allowances. Question 18. Which of the following events typically qualifies as a trigger for a lump sum benefit under a critical illness policy? A. Hospital admission for community-acquired pneumonia. B. Undergoing an elective angioplasty procedure. C. Receiving a major organ transplant. D. Outpatient chemotherapy infusions. The correct answer is C. The correct answer is receiving a major organ transplant, as that is a standard qualifying event for lump sum payment under a critical illness policy. Reason A is not correct. Hospitalization for pneumonia does not meet the specific critical illness trigger criteria. Reason B is not correct. Elective angioplasty is not typically listed as a qualifying critical illness event. Reason D is not correct. Chemotherapy infusions are treatments, not trigger events under standard critical illness designs. Question 19. A hospital indemnity policy provides a fixed daily benefit of $300 per day for inpatient confinement, up to 60 days per confinement. An insured has a 4-day hospital stay and incurs daily hospital charges of $1,000. Under the policy's daily benefit limit provision, how much will the insurer pay for this confinement? A. $1,200. B. $300. C. $4,000. D. $1,000. The correct answer is A. The policy specifies a per diem benefit of $300 regardless of actual charges. For a 4-day stay, the insurer pays 4 multiplied by $300 equals $1,200. Reason B is not correct. This reflects only 1 day's benefit rather than the total for all confinement days. Reason C is not correct. This is the total actual charges, but the indemnity policy pays the fixed daily amount, not actual expenses. Reason D is not correct. This represents the daily charge amount, but the policy pays a set per diem benefit, not actual charges. Question 20. Which of the following components is included under the entire contract clause of a health insurance policy? A. The agent's field underwriting report. B. The policy document, any endorsements, and a copy of the application. C. Statements made in pre-application promotional materials. D. The insurer's corporate charter and bylaws. The correct answer is B. The entire contract clause binds the insurer and insured to the policy document, any endorsements, and the signed application, excluding external reports or corporate documents. Reason A is not correct. Underwriting reports are not part of the contract and remain internal documents. Reason C is not correct. Promotional or marketing statements are not incorporated into the policy contract. Reason D is not correct. Corporate charters and bylaws are not policy-level contract components. Question 21. Under the time limit on defenses, incontestability provision, in a health insurance policy, after the initial 2-year period, the insurer may contest statements in the application only if they are A. Material misstatements unrelated to intent. B. Fraudulent misrepresentations. C. Unintentional errors or omissions. D. Verbal statements made to the agent. The correct answer is B. Once 2 years have passed, the insurer cannot contest the policy for misstatements except when those misstatements were made fraudulently. Reason A is not correct. Material misstatements are contestable only within the initial 2-year window. Reason C is not correct. Unintentional errors become incontestable after the 2-year period. Reason D is not correct. Verbal statements are not separately contestable beyond the fraud exception. Question 22. Which of the following but premium mode and minimum grace period combinations is correct under standard health insurance policy provisions? A. Weekly 7 days, monthly 31 days, annually 10 days. B. Weekly 7 days, monthly 10 days, semi-annually 31 days. C. Weekly 10 days, monthly 7 days, annually 31 days. D. Weekly 10 days, monthly 31 days, quarterly 7 days. The correct answer is B. Health policies must allow a 7-day grace for weekly premiums, 10 days for monthly, and 31 days for all other premium modes, including semi-annual. Reason A is not correct. That pairing misassigns monthly and annual grace periods. Reason C is not correct. Weekly and monthly are reversed in that option. Reason D is not correct. Quarterly is treated as an other mode and gets 31 days, not 7. Question 23. Which of the following is required for reinstatement of a lapsed health insurance policy under the reinstatement provision? A. Payment of the next 2 scheduled premiums without further documentation. B. Written proof of insurability and payment of all overdue premiums plus interest. C. Submission of a new application without proof of insurability. D. Completion of a 60-day waiting period before coverage resumes. The correct answer is B. Reinstatement requires evidence of insurability and settlement of all past due premiums, plus any specified interest before coverage is restored. Reason A is not correct. Simply paying upcoming premiums does not satisfy the proof requirement. Reason C is not correct. A new application must include proof of insurability, not just submission. Reason D is not correct. There is no standard 60-day wait. Coverage resumes upon approval and payment. Question 24. Carlos suffered a covered injury on March 5th and filed his claim paperwork on April 1st. Under his health policy's notice of claim provision, within how many days after the covered loss occurs must Carlos notify the insurer to comply with the time frame? A. No later than 20 days after the covered loss occurs. B. No later than 30 days after the covered loss occurs. C. No later than 90 days after the covered loss occurs. D. No later than 1 year after the covered loss occurs. The correct answer is A. The correct answer is no later than 20 days after the covered loss occurs because the notice of claim provision in a health policy requires written notice within 20 days of loss, whereas longer periods, such as 90 days, apply to proof of loss or limitation periods. Reason B is not correct. This option is incorrect because the standard notice of claim period under a health policy is shorter than 30 days. Reason C is not correct. This option is incorrect because 90 days is typically the proof of loss time frame, not the notice of claim period. Reason D is not correct. This option is incorrect because 1 year is usually the statute of limitations, not the notice of claim deadline. Question 25. Under the change of occupation provision, if an insured transfers from a medium-risk occupation to a low-risk occupation after policy issuance, the insurer is required to A. Require submission of a new application without any adjustment to the existing premium. B. Reduce the policy's benefit amount in proportion to the reduced occupational risk. C. Refund the difference between the original premium and the lower risk classification premium. D. Maintain the original premium rating with no refund or adjustment. The correct answer is C. The change of occupation provision mandates that when an insured moves to a less hazardous occupation, the insurer refunds the premium difference between the original classification and the lower risk rate. Reason A is not correct. A new application is not required. Only a premium adjustment is made for lower risk. Reason B is not correct. Benefit reductions apply only if the insured moves to a more hazardous occupation, not to a lower risk one. Reason D is not correct. The provision specifically provides for a refund when risk decreases, so maintaining the original rate is incorrect. Question 26. When an insured understated age on the application and the misstatement is later discovered, the insurer must A. Void the policy if the age misstatement exceeds 2 full years. B. Refund any excess premium without adjusting the benefit amount. C. Recalculate the policy's benefit to the amount that the paid premiums would have purchased at the correct age. D. Apply a higher premium rate prospectively while leaving the benefit unchanged. The correct answer is C. The misstatement of age provision requires the insurer to adjust the policy's benefit so that it equals what the premiums paid would have bought at the insured's true age. Reason A is not correct. Policies are not voided for age misstatement. Benefits are adjusted instead. Reason B is not correct. Excess premium refunds alone do not account for the correct benefit alignment with true age. Reason D is not correct. Prospective rate changes without benefit adjustment do not satisfy the misstatement correction rule. Question 27. If an insured has 2 accident policies with the same insurer covering $30,000 and $20,000 respectively, and incurs a $25,000 covered loss, under the pro rata provision, the $30,000 policy will pay A. $30,000, the entire face amount of the larger policy. B. $10,000, reflecting 40% of the loss based on policy face amount proportions. C. $25,000, the full amount of the loss. D. $15,000, reflecting 60% of the loss based on policy face amount proportions. The correct answer is D. The pro rata provision allocates loss payment among an insurer's policies by the ratio of each policy's face amount to the total face amount. So the $30,000 policy pays $30,000 divided by $30,000 plus $20,000 multiplied by $25,000 equals $15,000. Reason A is not correct. Payments are proportional, not equal to a policy's full face amount. Reason B is not correct. That amount reflects the share of the smaller policy rather than the larger one. Reason C is not correct. Neither policy pays the entire loss when multiple policies cover the risk. Question 28. A policyholder reviews the insuring clause of their new accident and health policy, seeking to clarify the insurer's duties under this clause. Which of the following is the insurer's responsibility as specified by the insuring clause? A. Pay covered losses as specified in the policy in exchange for premium payment. B. Disclose pre-existing conditions on the application. C. Submit proof of loss within policy time limits. D. Maintain claim files for a statutory period. The correct answer is A. The insuring clause obligates the insurer to pay covered losses as specified in the policy in exchange for the premium. The other choices describe duties of the insured or administrative requirements outside the core promise of the insuring clause. Reason B is not correct. This describes the applicant's duty of representation, not the insurer's obligations under the insuring clause. Reason C is not correct. This refers to the insured's proof of loss requirement rather than an insurer responsibility under the insuring clause. Reason D is not correct. This relates to record-keeping regulations and is not part of the insurer's primary promise to pay covered losses. Question 29. Under Wyoming law, what is the minimum free look period that must be provided for an individual health insurance policy delivered in the state? A. 5 days. B. 10 days. C. 15 days. D. 20 days. The correct answer is B. Wyoming statutes require insurers to include a free look period of at least 10 days on individual health policies, allowing the policyholder to return the policy for a full refund within that time frame. Reason A is not correct. A shorter period would not satisfy the statutory requirement for policy review and return. Reason C is not correct. 15 days exceeds the minimum period mandated by law and is not required. Reason D is not correct. 20 days is longer than the state-required free look period and not statutorily mandated. Question 30. According to Wyoming regulations, the probationary period may be applied only to sickness losses and may not exceed how many days? A. 15 days. B. 30 days. C. 60 days. D. 90 days. The correct answer is B. State rules limit the probationary period in accident and health policies to sickness losses and cap it at a maximum of 30 days before coverage for those losses begins. Reason A is not correct. A 15-day period would be below the maximum allowed and is not the statutory limit. Reason C is not correct. A 60-day probationary period would exceed the statutory maximum for sickness coverage. Reason D is not correct. A 90-day period greatly exceeds the state-imposed maximum for sickness losses. Question 31. In a disability income insurance policy, the elimination period is best defined as the A. Waiting period between the onset of disability and the commencement of benefit payments. B. Time after premium due date during which the policy remains in force despite non-payment. C. Period following application before any coverage becomes effective. D. Interval during which the insurer investigates the validity of a claim. The correct answer is A. The elimination period, sometimes called the waiting period, is the defined span of time that must pass after a disability begins before benefits become payable. Reason B is not correct. That describes a grace period for premium payments, not an elimination period. Reason C is not correct. That describes a probationary or waiting period before coverage takes effect, rather than benefit initiation. Reason D is not correct. That refers to a claims investigation period, not the elimination period. Question 32. On January 1st, Lisa purchases a disability income policy that includes a 60-day waiting period and a 90-day elimination period. She becomes totally disabled on March 1st. Which statement best describes the difference between the waiting period and the elimination period? A. The waiting period is the time after a disability begins before benefits are payable, while the elimination period is the time after policy issue during which no coverage applies. B. The waiting period begins on the policy effective date before any coverage applies, whereas the elimination period begins on the date of disability and must pass before benefits start. C. The waiting period eliminates duplicate coverage from other policies, whereas the elimination period excludes pre-existing conditions. D. The waiting period and elimination period are interchangeable terms that both delay benefit payments following a claim. The correct answer is B. The correct answer explains that the waiting period is the initial span after policy inception, before coverage for new losses applies, while the elimination period measures the duration after a covered disability begins, before benefit payments commence. Reason A is not correct. That description reverses the definitions and swaps the functions of the two periods. Reason C is not correct. This distractor introduces unrelated concepts of duplicate coverage and pre-existing conditions exclusion. Reason D is not correct. This choice incorrectly treats the two distinct periods as identical rather than serving different timing functions. Question 33. Which of the following best characterizes the effect of adding an impairment rider to a disability income policy? A. Excludes coverage for losses due to a specified pre-existing impairment. B. Waives the elimination period for losses from a specified impairment. C. Extends the benefit period for a particular impairment. D. Converts partial disability benefits into residual disability coverage. The correct answer is A. The impairment rider specifically removes coverage for losses resulting from the named impairment, allowing the insurer to issue the policy with exclusions for that condition. Reason B is not correct. Waiving the elimination period is not a function of the impairment rider, which excludes coverage rather than accelerating benefits. Reason C is not correct. Extending the benefit period is unrelated. The impairment rider excludes, not lengthens, coverage for the named condition. Reason D is not correct. Residual benefit conversions are part of a residual disability rider, not the impairment rider. Question 34. Under a typical guaranteed insurability rider attached to a disability income policy, at which of the following ages may the insured elect to increase benefit amounts without evidence of insurability? A. 23, 27, 31, 35, 39, and 43. B. 26, 29, 32, 35, 38, and 41. C. 25, 28, 31, 34, 37, and 40. D. 30, 33, 36, 39, and 42. The correct answer is C. A standard guaranteed insurability rider allows the insured to purchase scheduled increases at ages 25, 28, 31, 34, 37, and 40 without providing evidence of insurability. Reason A is not correct. Combining different starting points and intervals deviates from the standard guaranteed insurability schedule. Reason B is not correct. Shifting each age by 1 year does not match the established schedule for benefit increases. Reason D is not correct. Fewer election dates and different ages do not represent the typical step-up schedule. Question 35. In an accidental death rider on an accident and health policy, the principal sum benefits payable upon accidental death are defined as A. A return of all premiums paid under the policy. B. A flat multiple of 3 times the insured's annual income. C. A percentage of the monthly disability benefit schedule. D. An additional sum equal to the policy's base benefit amount. The correct answer is D. The principal sum under an accidental death rider is defined as an amount equal to the policy's face or base benefit, paid in addition to the regular benefit upon accidental death. Reason A is not correct. The accidental death rider does not refund premiums. Reason B is not correct. The rider does not calculate benefits as a multiple of income. Reason C is not correct. Principal sum is not tied to the disability benefit schedule but to the face amount. Question 36. Jessica purchased an accident and health policy with a cost of living adjustment rider that ties annual benefit increases to the Consumer Price Index for urban wage earners and clerical workers, CPIW. In the first policy year, the CPIW rose by 3.2%. In the second policy year, the CPIW rose by 2.0%, and the CPIU rose by 2.8%. Based on the rider's indexing method, what percentage increase will be applied to Jessica's benefit at the second anniversary? A. 3.2%. B. 5.2%. C. 2.8%. D. 2.0%. The correct answer is D. The COLA rider specifies annual adjustments based on changes in the CPIW. Therefore, the benefit increase at the second anniversary equals the second-year CPIW increase of 2.0%. Reason A is not correct. This choice reflects the prior year's adjustment rather than the second-year CPIW change. Reason B is not correct. This represents the cumulative increase over both years, whereas the rider applies only the annual CPIW change. Reason C is not correct. This choice uses the CPIU change instead of the CPIW index specified in the rider. Question 37. As of 2024, what is the Medicare Part A inpatient hospital deductible per benefit period? A. $1,712. B. $1,632. C. $1,800. D. $1,600. The correct answer is A. The correct answer is $1,712, which is the deductible required for each benefit period under Medicare Part A in 2024. Reason B is not correct. This amount reflects the previous year's deductible rather than the current 2024 rate. Reason C is not correct. This figure exceeds the actual 2024 deductible and is therefore incorrect. Reason D is not correct. This older deductible amount is no longer applicable for 2024. Question 38. What is the standard monthly premium amount for Medicare Part B in 2024 for most enrollees? A. $174.70. B. $174. C. $168.10. D. $179.40. The correct answer is A. The correct answer is $174.70, which is the standard monthly premium for Medicare Part B enrollees in 2024. Reason B is not correct. This amount is slightly below the actual 2024 premium and does not match current rates. Reason C is not correct. This figure corresponds to an earlier year's premium rather than the 2024 rate. Reason D is not correct. This value exceeds the 2024 standard premium and is therefore incorrect. Question 39. Shortly after enrolling in Medicare Part B, Mr. Alvarez schedules a preventive care appointment. Which of the following services will Medicare Part B cover at 100% with no cost sharing? A. Shingles, herpes zoster vaccination. B. Diagnostic echocardiogram. C. Therapeutic shoes for diabetic neuropathy. D. Influenza virus vaccination. The correct answer is D. The correct answer is influenza virus vaccination because Medicare Part B fully covers flu shots as a preventive service with no coinsurance or deductible. Reason A is not correct. Shingles vaccination is covered under Medicare Part D rather than Part B and may require cost sharing under that benefit. Reason B is not correct. A diagnostic echocardiogram is considered diagnostic rather than preventive and is subject to Part B coinsurance. Reason C is not correct. Therapeutic shoes for diabetic neuropathy are a DME benefit under Part B but subject to deductible and coinsurance, not 100% coverage. Question 40. Under the Affordable Care Act, Medicaid expansion in Wyoming, adults aged 19 to 64 qualify for coverage if their household income does not exceed what percent of the federal poverty level FPL? A. 100% of FPL. B. 200% of FPL. C. 150% of FPL. D. 138% of FPL. The correct answer is D. The correct answer is 138% of FPL, as the ACA Medicaid expansion in Wyoming sets adult eligibility at that threshold. Reason A is not correct. A 100% threshold corresponds to traditional Medicaid, not the ACA expansion limit. Reason B is not correct. A 200% level is well above the set expansion income threshold. Reason C is not correct. A 150% level exceeds the expansion's eligibility cap. Question 41. A 76-year-old widow applies for Medicaid to cover nursing home care. She owns a primary residence valued at $150,000 with a $50,000 mortgage, one car valued at $10,000 a savings account with $4,000 a prepaid funeral contract worth $2,000, and a life insurance policy with a cash surrender value of $3,000. Face value $10,000. What amount of assets will be counted toward her Medicaid asset limit for long-term care eligibility? A. $4,000. B. $6,000. C. $7,000. D. $5,500. The correct answer is D. The primary residence and one vehicle are exempt, as are prepaid funeral contracts. Life insurance policies with a face value over $1,500 count only the cash surrender value above $1,500, so $3,000 minus $1,500 equals $1,500. The full $4,000 savings is countable. Total countable assets are $4,000. Plus $1,500 equals $5,500. Reason A is not correct. Counts only the savings, incorrectly omitting the partially countable life insurance cash value. Reason B is not correct. Counts the full $3,000 life insurance cash value instead of only the portion above $1,500. Reason C is not correct. Includes full cash surrender value for life insurance and house value, ignoring the exemptions for those assets. Question 42. Under Social Security disability insurance rules, benefits are payable beginning after a 5-month waiting period. If a claimant's disability onset date is March 15 inches, which month will monthly SSDI payments first be payable, assuming all other eligibility criteria are met? A. July. B. August. C. September. D. October. The correct answer is C. This option is correct because SSDI benefits are not payable for the initial 5 full calendar months of disability. With a March 15th onset, the waiting months are April through August, making September the first payable month. Reason A is not correct. This choice is wrong because July would only be the 3rd full month after the March onset. Reason B is not correct. This choice is wrong because August represents only the 4th full month after the onset date. Reason D is not correct. This choice is wrong because October would reflect a 6-month wait, 1 month longer than the required 5-month waiting period. Question 43. Mark, age 45, ceased working due to a spinal injury 14 months ago and remains unable to perform any substantial gainful activity. He attempted part-time work but stopped after 1 month because of pain, during which he earned $1,500 per month. Under the Social Security Administration's definition of disability, which factor most directly supports his eligibility for disability benefits? A. Inability to engage in substantial gainful activity for at least 12 consecutive months due to a medically determinable impairment. B. Prevention of heavy lifting and other manual tasks for only a 6-month period. C. Earning $1,500 per month during his 1-month attempt at part-time work. D. Ongoing severe pain despite completing prescribed conservative therapy over the same time frame. The correct answer is A. The correct answer identifies the core Social Security criteria: a medically determinable impairment that prevents engagement in substantial gainful activity for at least 12 consecutive months. Mark's injury meets both duration and functional loss requirements. Reason B is not correct. The impairment duration of 6 months is shorter than the required 12-month period. Reason C is not correct. Monthly earnings above the substantial gainful activity threshold indicate engagement in SGA, which would disqualify disability under the definition. Reason D is not correct. Pain severity and treatment response alone do not satisfy the statutory requirement without the mandated inability to perform SGA for 12 months. Question 44. Under IRS rules, what limitation applies when a self-employed individual deducts medical insurance premiums for themselves, their spouse, dependents, and children under age 27? A. The deduction cannot exceed 7.5% of adjusted gross income. B. The deduction is limited to net profit from the self-employment business. C. Only 50% of the premiums are deductible as an above-the-line deduction. D. The deduction is allowed only if the individual is not eligible for an employer-sponsored health plan. The correct answer is B. The correct answer is that this above-the-line deduction is capped by net earnings from self-employment, ensuring it cannot exceed income generated by the business. Reason A is not correct. That percentage limit applies to unreimbursed medical expenses, not the self-employed health insurance deduction. Reason C is not correct. The self-employed health insurance deduction allows 100% of premiums, not just half. Reason D is not correct. Eligibility for an employer-sponsored plan does not eliminate the self-employed health insurance deduction. Question 45. Midway through the year, Lauren becomes totally disabled and begins receiving $4,000 per month under her employer's group disability plan. Her employer, Apex Industries, pays 100% of the premiums for this coverage. How are Lauren's disability benefit payments treated for federal income tax purposes? A. The benefits are entirely tax-free because the premiums paid by the employer are a non-deductible business expense. B. Each monthly benefit is excluded from gross income to the extent of the premiums she would have paid if she had funded the policy herself. C. Only the portion of each benefit attributable to employer-paid premiums in excess of $2,500 per year is includable in gross income. D. The full amount of each monthly benefit is includable in her gross income as ordinary income. The correct answer is D. The correct answer is that the full monthly benefit is includable in gross income because employer-paid disability insurance premiums are deductible by the employer, and therefore the benefits are taxable to the employee under the Internal Revenue Code. Reason A is not correct. This is incorrect because the fact that the employer's premium payments are non-deductible does not make the benefits tax-free. Employer-paid premiums generally result in taxable benefits. Reason B is not correct. This is incorrect because Lauren did not pay any premiums herself, so there is no employee-funded portion that can be excluded. Reason C is not correct. This is incorrect because there is no $2,500 threshold. When the employer pays the entire premium, the entire benefit is taxable. Question 46. Under Standard Coordination of Benefits Guidelines, when a dependent is covered by separate group health plans of both parents without any court decree or custody agreement specifying otherwise, which method is used to determine the primary payer? A. The plan that has been continuously in effect for the longer period. B. The plan offering the higher annual maximum benefit for the dependent. C. The plan of the parent whose birth month and day occur earliest in the calendar year. D. The plan covering the parent with the higher annual income. The correct answer is C. The standard birthday rule specifies that, absent other directives, the plan of the parent whose birth month and day fall earlier in the calendar year pays primary for the dependent. Reason A is not correct. The length of time a plan has been in effect is not used in the birthday rule method. Reason B is not correct. Primary determination is based on birth dates, not on the plan offering the largest benefit limit. Reason D is not correct. Dependent priority is determined by calendar birth dates rather than parental income levels. Question 47. The son of divorced parents is covered as a dependent under both parents' health insurance plans. The mother's birthday is June 15th, and the father's is March 10th. Under the birthday rule for dependent children coverage, Which plan is primary for the child's medical expenses? A. The mother's primary employer-sponsored health plan. B. The plan of the parent with primary physical custody. C. The father's primary employer-sponsored health plan. D. The plan with the earlier effective policy date. The correct answer is C. Under the birthday rule, the parent whose birthday falls earlier in the calendar year holds the primary plan for dependent children's coverage. Reason A is not correct. The mother's plan is not primary because her birthday occurs later in the calendar year than the father's. Reason B is not correct. Custodial arrangements do not dictate primary coverage under the birthday rule. Reason D is not correct. Policy effective dates are irrelevant when applying the birthday rule. Question 48. Under the residual disability provision of a standard disability income policy, what minimum percentage loss in gross earnings from pre-disability levels is required to trigger partial disability benefits when the insured returns to work? A. 10% loss in gross earnings. B. 30% loss in gross earnings. C. 20% loss in gross earnings. D. 40% loss in gross earnings. The correct answer is C. The correct answer is based on the standard residual disability definition, which requires at least a 20% reduction in earnings from pre-disability income to trigger partial disability benefits. Reason A is not correct. This percentage is below the usual minimum threshold and would trigger benefits too easily compared to standard definitions. Reason B is not correct. This percentage exceeds the common residual criteria, making it more than generally required to trigger benefits. Reason D is not correct. This percentage is well above the standard threshold and would delay benefit payments unnecessarily. Question 49. A self-employed dentist holds a disability income policy that provides only non-occupational coverage. While performing a dental procedure in his home-based practice, he trips over equipment and fractures his wrist. Which source of benefits should cover his medical costs and lost income from this injury? A. Workers' compensation insurance. B. An occupational disability income policy. C. The dentist's non-occupational disability policy. D. Social Security disability benefits. The correct answer is A. Workers' compensation insurance covers injuries arising out of and in the course of employment or business operations, whereas a non-occupational disability policy excludes work-related injuries, and Social Security benefits address long-term federal disability qualifications, not acute fractures. Reason B is not correct. Although an occupational policy would cover work-related injuries, the dentist does not carry such coverage. Reason C is not correct. This policy excludes injuries that occur during work activities, so it will not respond to this claim. Reason D is not correct. Social Security disability benefits require meeting federal disability standards and do not provide immediate coverage for an acute wrist fracture. Question 50. In the NAIC Uniform Individual Accident and Health Insurance application, which part requires the applicant to authorize HIV testing and investigative consumer reports? A. Part 1, Personal and General Information. B. Part 2, Agent's Report and Policy Summary. C. Part 3, Medical History and Physical Exam Results. D. Part 4, Authorization and Investigative Consumer Consent. The correct answer is D. The correct answer is Part 4, which is the section that includes applicant authorizations for HIV testing and investigative consumer reports. Reason A is not correct. This is incorrect because Part 1 collects only personal and general information, not authorizations. Reason B is not correct. This is incorrect because Part 2 is reserved for the agent's report, not investigational consents. Reason C is not correct. This is incorrect because Part 3 covers medical history and exam results, not authorization forms. Question 51. According to standard conditional receipt provisions, if the applicant undergoes an initial physical exam and additional diagnostic tests are ordered before approval, coverage under the receipt will commence on which date? A. Date of application. B. Date of initial physical examination. C. Date of policy delivery. D. Date of completion of the final required medical diagnostic test. The correct answer is D. Coverage under a conditional receipt with subsequent medical requirements begins on the date the last required diagnostic test is completed. Reason A is not correct. This is incorrect because application date would apply only if no further tests were required. Reason B is not correct. This is incorrect because coverage may be delayed if additional tests are mandated beyond the initial exam. Reason C is not correct. This is incorrect because policy delivery date is unrelated to conditional receipt effective dates. Question 52. Tom, a business partner in a two-person firm, extends a significant loan to his partner, Jill. To secure the loan, Tom applies for a life insurance policy on Jill. Under Wyoming law, which is the most accurate statement regarding insurable interest at the time of application? A. Insurable interest depends solely on beneficiary designation and is irrelevant at application. B. An applicant must prove potential financial loss only at the time of claim, not at application. C. Insurable interest derives from a contingent financial obligation and must be shown at application. D. The insurer must verify that insurable interest exists at issuance but not at application. The correct answer is C. This option is correct because Wyoming law requires an applicant to demonstrate a financial stake in the insured's life through a contingent obligation at the time the application is submitted. Reason A is not correct. Insurable interest is required at the time of application and is not tied solely to who is named as beneficiary. Reason B is not correct. Wyoming law requires insurable interest at application rather than only at the time of claim. Reason D is not correct. Verification of insurable interest must occur when the application is submitted, not deferred until policy issuance. Question 53. According to Medical Information Bureau MIB operating procedures, how often may an individual obtain a free disclosure of the information contained in his or her MIB file? A. Every 6 months. B. Every 24 months. C. Every 12 months. D. Every 36 months. The correct answer is B. MIB operating procedures specify that individuals may receive a complimentary copy of their MIB file free of charge only once every 24 months. Reason A is not correct. The MIB does not permit free disclosures as frequently as every 6 months. Reason C is not correct. An annual free request is not allowed. The free disclosure interval is longer than 12 months. Reason D is not correct. MIB only allows free disclosure every 24 months. More frequent requests require a fee. Question 54. Upon submitting her application for individual health coverage, Linda receives a written notice from her insurer indicating that a consumer report has been ordered. Under the Fair Credit Reporting Act, which entitlement is Linda guaranteed at this point in the underwriting process? A. The ability to obtain a free copy of the exact report from the reporting agency within 60 days of the insurer's request. B. The opportunity to correct any reported errors directly with the nationwide consumer reporting agency before final underwriting decisions. C. The option to require the insurer to re-endorse the report through a second credit agency review before premium issuance. D. The right to receive a clear statement of her rights regarding the use of the report at the time the report was requested. The correct answer is D. The Fair Credit Reporting Act requires insurers to provide consumers with a clear, written summary of their rights at the time a consumer report is requested for underwriting. Reason A is not correct. The free copyright applies only after an adverse action, not immediately upon the request for the report. Reason B is not correct. Consumers can dispute inaccuracies at any time with a reporting agency, but there is no guaranteed corrective review before underwriting decisions. Reason C is not correct. There is no FCR. A provision allowing consumers to demand a secondary credit agency review prior to policy issuance. Question 55. During the underwriting review of Martin's individual health application, which discloses a history of hypertension, the underwriter requests an attending physician statement. What is the principal benefit of obtaining an APS in this context? A. It provides an independent laboratory evaluation of recent biometric findings directly from the treating physician. B. It satisfies federal reporting requirements by documenting pre-existing conditions to the Medical Information Bureau. C. It serves as a substitute for a paramedical exam by offering third-party attestation of general health. D. It delivers a detailed clinical history to accurately stratify the applicant within the insurer's morbidity risk classifications. The correct answer is D. An attending physician statement supplies comprehensive medical history details that allow underwriters to place applicants into the correct morbidity risk class for premium determination. Reason A is not correct. An APS summarizes historical clinical data rather than providing new lab results directly from the physician. Reason B is not correct. Reporting to the MIB is a separate process. APS reports support risk assessment, not federal reporting obligations. Reason C is not correct. An APS is supplemental to, not a replacement for, a paramedical exam and general health attestation. Question 56. Under Wyoming regulations for individual accident and health insurance, what must a producer obtain at the time of policy delivery to ensure coverage becomes effective? A. A signed statement from the applicant certifying no change in health since the application was submitted. B. A signed medical release form authorizing the insurer to retrieve past medical records. C. A letter from the applicant's attending physician confirming insurability. D. An affidavit of insurability completed by the policy beneficiary. The correct answer is A. The producer is required to secure the applicant's signature affirming that no health changes have occurred since the application, thereby confirming continued insurability and allowing the policy to take effect. Reason B is not correct. No medical release for past records is mandated at delivery. Only a statement of good health is required. Reason C is not correct. There is no requirement for a physician's letter at delivery. Only the applicant's own certification is needed. Reason D is not correct. An affidavit completed by the beneficiary is not required. The focus is on the applicant's health declaration. Question 57. A policy owner receives a newly issued accident and health policy by mail. The policy document is dated March 1st, was postmarked March 3rd, and delivered on March 5th. Under Wyoming free look provisions, on which date does the free look period begin? A. March 1st. B. March 3rd. C. March 5th. D. The date the policy owner signs a delivery receipt. The correct answer is C. The free look period under Wyoming law begins when the policy is delivered to the policy owner. In this scenario, it was delivered on March 5th. Reason A is not correct. The date printed on the policy does not trigger the start of the free look period. Reason B is not correct. The postal date indicates mailing but does not determine when free look begins. Reason D is not correct. Wyoming's free look start is tied to delivery, not to when the policy owner signs a receipt. Question 58. On Monday, June 3rd, an agent receives an application for a new accident and health policy that will replace the applicant's existing coverage. Under Wyoming regulations, by what date must the agent send the written replacement notice to the existing insurer, assuming weekends are excluded? A. June 3rd. B. June 8th. C. June 10th. D. On the delivery date of the new policy. The correct answer is C. Wyoming law requires the replacement notice be sent within 5 business days of application receipt. Counting Monday, June 3rd as day 0, the 5th business day falls on June 10th. Reason A is not correct. Notice is not required to be sent on the same day the application is received. Reason B is not correct. 5 calendar days is incorrect because weekends are excluded. Reason D is not correct. The notice deadline is not tied to policy delivery. Question 59. Under Wyoming regulations, which of the following is a required eligibility condition for obtaining a resident accident and health producer license? A. Completion of 20 hours of prelesensing coursework. B. Proof of U.S. citizenship. C. No felony involving moral turpitude. D. Minimum age of 21 years. The correct answer is C. This option is correct because Wyoming requires applicants to have no felony convictions involving moral turpitude in order to qualify for a resident accident and health producer license. Reason A is not correct. Completion of prelesensing coursework is not a statutory prerequisite for licensure eligibility, only for exam preparation. Reason B is not correct. U.S. citizenship is not mandatory. Proof of lawful presence in the U.S. suffices. Reason D is not correct. The minimum age requirement is 18 years, not 21. Question 60. Under Wyoming's reciprocal licensing process, a non-resident insurance producer is exempt from taking the state licensing examination if which condition is met? A. Maintains a principal place of business in Wyoming. B. Possesses a non-resident producer license in good standing from their home state. C. Has an active appointment with a Wyoming insurer. D. Has submitted a $10,000 surety bond to the state. The correct answer is B. This option is correct because Wyoming waives exam requirements for non-residents holding a comparable license in good standing from their home state under reciprocity agreements. Reason A is not correct. Maintaining a principal place of business in Wyoming does not eliminate the exam requirement. Reason C is not correct. An active appointment with an insurer does not provide an exam exemption. Reason D is not correct. Submitting a surety bond is not related to exam waivers. Question 61. Which situation qualifies an individual to receive a temporary non-renewable producer license in Wyoming for up to 180 days? A. While awaiting results of the licensing examination. B. Upon the death of the sole licensed individual. C. During a pending disciplinary hearing. D. For business succession due to corporate merger. The correct answer is B. This option is correct because Wyoming law allows issuance of a temporary license for up to 180 days when the original licensee dies or becomes mentally or physically incapacitated. Reason A is not correct. Temporary licenses are not issued merely for awaiting exam results. Reason C is not correct. Licenses are not granted during disciplinary proceedings. Reason D is not correct. Corporate mergers do not qualify for temporary licensing. Question 62. Under Wyoming insurance law, which action is required to register a business entity as an insurance producer? A. File articles of incorporation outside the state. B. Establish annual gross premiums exceeding $100,000. C. Post a performance bond of $50,000 with the commissioner. D. Designate a licensed individual responsible for the entity's compliance. The correct answer is D. This option is correct because Wyoming mandates that every business entity registration include a designated licensed individual who is responsible for the entity's compliance with insurance regulations. Reason A is not correct. Articles of incorporation must be filed in Wyoming, not outside the state. Reason B is not correct. There is no premium threshold requirement for business entity registration. Reason C is not correct. Posting a performance bond is not required for entity registration. Question 63. According to Wyoming regulations, Which statement accurately describes the continuing education requirement for renewing an accident and health producer license? A. 20 hours per year, including 5 inches ethics. B. 24 hours biennially with no specified ethics mandate. C. 24 hours biennially, including at least 3 inches ethics. D. 30 hours biennially with no ethics credit required. The correct answer is C. This option is correct because Wyoming law requires licensed accident and health producers to complete 24 hours of continuing education every 2 years, including a minimum of 3 hours in ethics. Reason A is not correct. The requirement is biennial, not annual, and the total hours differ. Reason B is not correct. An ethics component is specifically mandated under Wyoming rules. Reason D is not correct. The required number of hours is 24, not 30, and ethics credit is required. Question 64. Catherine's accident and health producer license expired on June 30th. Her renewal application was received by the Wyoming Department of Insurance on August 9th, which is 40 days after expiration. According to Wyoming's license renewal fee schedule, the biennial renewal fee for this line is $100 with a 25% penalty for submissions within 30 days after expiration and a 50% penalty for submissions 31 through 60 days late. How much must Catherine submit to renew her license? A. $150. B. $125. C. $100. D. $175. The correct answer is A. This option is correct because the application was received 40 days after expiration, which falls within the 31 through 60-day late window that carries a 50% penalty on the $100 renewal fee for a total of $150. Reason B is not correct. This reflects applying the 25% penalty for renewals within 30 days, but the submission was received after that 30-day period. Reason C is not correct. This reflects paying only the base fee without any late penalty, which doesn't apply for 31 through 60 days late. Reason D is not correct. This amount applies a 75% penalty, which exceeds the maximum 50% penalty for a 31 through 60-day late renewal. Question 65. Under Wyoming insurance statutes, which of the following correctly contrasts twisting with churning? A. Twisting is inducing a policy replacement through misrepresentation of terms, while churning is replacing to generate new commissions. B. Twisting is replacing a policy solely to earn higher commissions, while churning involves misleading about benefits to induce replacement. C. Twisting is unlawfully combining two policies for a client's benefit, while churning is exchanging policy owners without consent. D. Twisting is offering rebates to induce new sales, while churning is misrepresenting an existing policy's dividends. The correct answer is A. Twisting is defined as inducing replacement by misrepresenting terms or benefits, whereas churning occurs when replacement is done primarily for new commissions. Reason B is not correct. This reverses the definitions, confusing the commission motive with misrepresentation. Reason C is not correct. This describes neither statutory twisting nor churning definitions. Reason D is not correct. Rebating and misrepresenting dividends are separate violations, not the statutory definitions. Question 66. Under Wyoming law, what is the maximum value of promotional gifts an agent may give to a prospective policyholder in a calendar year without violating the rebate prohibition? A. $25 per recipient. B. $50 per recipient. C. $75 per recipient. D. $100 per recipient. The correct answer is B. Wyoming statutes allow non-monetary gifts up to $50 per person per calendar year, without constituting an unlawful rebate. Reason A is not correct. A lower threshold is plausible but does not match the statutory allowance. Reason C is not correct. This overstates the permissible gift value under regulation. Reason D is not correct. This is above the limit set by Wyoming law. Question 67. Which of the following would be considered false advertising of an insurance policy under Wyoming regulations? A. Claiming a policy will accumulate guaranteed dividends when dividends are non-guaranteed. B. Listing the insurer's legal name and policy form number in an ad. C. Describing coverage limits that match the policy's actual benefits. D. Presenting a compliant summary of exclusions and limitations. The correct answer is A. Representing non-guaranteed dividends as guaranteed is misleading and violates Wyoming's false advertising standards. Reason B is not correct. Including legal name and form number is required, not false advertising. Reason C is not correct. Accurate coverage descriptions comply with regulations. Reason D is not correct. Proper disclosure of exclusions is permitted and required. Question 68. Which scenario exemplifies coercion as defined by Wyoming insurance unfair trade practice statutes? A. An agent threatens policy cancellation if the insured does not purchase a supplemental policy. B. An agent offers a price break for client referrals. C. An agent provides free brochures on health planning. D. An agent discloses all policy provisions in writing. The correct answer is A. Threatening policy cancellation to force purchase of additional coverage constitutes coercion under Wyoming law. Reason B is not correct. Offering lawful discounts for referrals is not coercion. Reason C is not correct. Providing informational materials is permissible solicitation. Reason D is not correct. Full disclosure of provisions is required and non-coercive. Question 69. Under Wyoming statutes, which practice constitutes misrepresentation of policy dividends? A. Stating that dividends are guaranteed under a participating policy. B. Explaining that dividend amounts vary annually based on experience. C. Noting that dividends are declared at the insurer's discretion. D. Providing past dividend history without projection of future values. The correct answer is A. Declaring dividends as guaranteed misleads applicants, and Wyoming law prohibits representing non-guaranteed dividends as certain. Reason B is not correct. Describing variable dividends accurately does not misrepresent. Reason C is not correct. Stating discretionary nature is correct and compliant. Reason D is not correct. Providing historical data without projections is permissible. Question 70. A Wyoming insurance producer receives a formal written request from the Commissioner of Insurance seeking records related to a complaint of unfair trade practices. Under Wyoming statutes, within how many days must the producer respond to the Commissioner's inquiry? A. 10 calendar days. B. 15 calendar days. C. 30 calendar days. D. 45 calendar days. The correct answer is B. Wyoming statutes require producers to furnish the commissioner with requested records within 15 calendar days of a formal inquiry, ensuring timely regulatory oversight. Reason A is not correct. A 10-day deadline is shorter than the statutory requirement, making it incorrect. Reason C is not correct. A 30-day response period exceeds the time frame specified by statute. Reason D is not correct. A 45-day deadline is longer than the required statutory response period. Question 71. Pursuant to Wyoming Statute Section 26.3.101, the Insurance Commissioner has which of the following regulatory powers with regard to rulemaking? A. Authorize insurers to self-regulate policy forms, endorsements, and contract provisions, absent both Commissioner oversight and legislative approval. B. Issue mandatory bulletins with the legal force of statutes to adjust policy rates or terms without APA compliance. C. Adopt, amend, or repeal rules under the Wyoming Administrative Procedures Act to implement and enforce the state insurance code. D. Suspend or amend statutory provisions through emergency orders without requiring subsequent legislative ratification or public hearing. The correct answer is C. The statute specifically empowers the Commissioner to adopt, amend, or repeal rules under the APA to enforce and implement the insurance code. Reason A is not correct. Insurers cannot self-regulate forms without prior Commissioner approval under the insurance code. Reason B is not correct. Bulletins do not carry the force of law outside of the formal APA rulemaking process. Reason D is not correct. Emergency orders do not override statutes without subsequent legislative ratification and public hearing requirements. Question 72. Pursuant to Wyoming Statute Section 26-3501, which of the following best describes the minimum frequency at which the Commissioner must conduct comprehensive financial examinations of domestic insurers? A. At least every 3 years or sooner upon written request from the state legislature or controller. B. Annually for any insurer with premiums exceeding $50 million and biennially for all other insurers. C. Only upon receipt of credible evidence of potential insolvency or significant regulatory noncompliance requiring immediate intervention. D. At least every 5 years or more frequently if the insurer's financial condition warrants a more comprehensive review. The correct answer is D. The statute requires comprehensive examinations at least once every 5 years, with more frequent reviews if an insurer's condition warrants it. Reason A is not correct. The law does not specify a 3-year interval or legislative request as a trigger. Reason B is not correct. There is no statutory provision for differentiated intervals based on premium volume. Reason C is not correct. Examinations are not solely triggered by evidence of insolvency. Periodic exams are legally mandated. Question 73. An insurance producer in Wyoming receives a commissioner's cease and desist order alleging unauthorized rebating practices. To prevent the order from becoming final and enforceable, within what time frame and to whom must the producer submit a request? A. File a petition for judicial review in the district court within 30 days of service. B. Submit a written request for an administrative hearing to the Commissioner within 30 days of service. C. Send a written objection to the Governor's office within 15 days of receipt. D. Petition for a stay of the order from the Commissioner within 10 days. The correct answer is B. Under Wyoming insurance statutes, a producer must request an administrative hearing before the Commissioner in writing within 30 days of being served with a cease and desist order. Failure to do so renders the order final. Reason A is not correct. Judicial review is only available after the Commissioner's final administrative decision, not as the initial response to the order. Reason C is not correct. The Governor's office is not the designated forum for contesting cease and desist orders in Wyoming. Reason D is not correct. A stay request may accompany the hearing request but is not independently required within 10 days. The critical deadline is the 30-day hearing request. Question 74. Under the Wyoming Life and Health Insurance Guarantee Association, a covered person's health insurance benefits are protected up to what maximum amount per individual? A. $300,000. B. $250,000. C. $100,000. D. $500,000. The correct answer is A. The Wyoming Life and Health Insurance Guarantee Association statute specifies that health insurance benefits are protected for each covered person up to $300,000. This limit applies regardless of the number of policies held with insolvent insurers. Reason B is not correct. This figure falls short of the maximum protection limit identified in the Wyoming statute. Reason C is not correct. This amount is lower than the statutory protection limit set by the Association for Health Benefits. Reason D is not correct. This exceeds the maximum statutory protection limit established for health insurance benefits. Question 75. Under Wyoming law, assessments levied by the Life and Health Guarantee Association on member insurers in any calendar year cannot exceed what percentage of a member insurer's net direct written life and health premiums? A. 0.5%, B. 1%, C. 5%, D. 2%. The correct answer is D. Wyoming statute caps annual assessments by the Life and Health Guarantee Association at 2% of each member insurer's net direct written life and health premiums to fund the Guarantee Association's obligations. Reason A is not correct. This understates the legislated cap on annual assessments under Wyoming law. Reason B is not correct. This is below the statutory maximum percentage permitted for assessments. Reason C is not correct. This exceeds the maximum percentage the law allows for annual assessments. Question 76. An accident and health producer in Wyoming runs a digital ad stating, "Your policy is backed by the Wyoming Life and Health Insurance Guarantee Association claims are 100% protected if your insurer becomes insolvent." Which element of this advertisement violates Wyoming's rules on Guarantee Association advertising? A. Use of the Guarantee Association's full legal name instead of its acronym. B. The claim that claims are 100% protected by the Guarantee Association if the insurer fails. C. Placement of the Guarantee Association name in bold type at the top of the ADDI. D. Inclusion of the association's mission statement in fine print. The correct answer is B. This statement misrepresents the scope of protection by implying full claim coverage. Wyoming rules prohibit advertising that the Guarantee Association will pay all benefits without reference to statutory limits. Reason A is not correct. Using the full legal name is permissible as long as it is not misleading about coverage. Reason C is not correct. There is no prohibition on font style or placement of the association's name. Reason D is not correct. Including the mission statement does not conflict with advertising rules so long as coverage limits are not misstated. Question 77. Under Wyoming statutes, what is the minimum free look period that must be provided to an insured for an individual health insurance policy? A. 5 days. B. 30 days. C. 15 days. D. 10 days. The correct answer is D. The correct answer is a 10-day free look period, as Wyoming law requires insurers to allow at least 10 days during which the policyholder may return an individual health policy for a full refund. Reason A is not correct. A 5-day period is too short and does not satisfy the statutory minimum requirement. Reason B is not correct. A 30-day period applies to certain long-term care provisions, not standard health policies. Reason C is not correct. A 15-day period exceeds what the statute mandates for health policies in Wyoming. Question 78. Per Wyoming law, how many days grace period must be allowed for an individual accident and health policy issued with weekly premium mode? A. 7 days. B. 5 days. C. 10 days. D. 14 days. The correct answer is A. The correct answer is a 7-day grace period, as Wyoming statutes require at least 7 days for weekly premium accident and health policies. Reason B is not correct. A 5-day interval is insufficient to meet the statutory requirement for weekly mode. Reason C is not correct. A 10-day grace period is prescribed for monthly, not weekly, premium modes. Reason D is not correct. A 14-day grace period exceeds what Wyoming law requires for weekly premium policies. Question 79. In Wyoming, what is the minimum right to examine, free look period, required for a long-term care insurance policy? A. 10 days. B. 15 days. C. 60 days. D. 30 days. The correct answer is D. The correct answer is a 30-day right to examine period, as Wyoming law mandates at least 30 days during which LTC policyholders may return the policy for a full refund. Reason A is not correct. A 10-day period applies to standard health policies, not LTC policies. Reason B is not correct. A 15-day period is not a statutory requirement for long-term care insurance. Reason C is not correct. A 60-day period exceeds the minimum requirement set by Wyoming statute. Question 80. Under Wyoming statutes, within how many days after an occurrence or start of treatment must written notice of claim be given by the insured on an accident and health policy? A. 10 days. B. 60 days. C. 30 days. D. 20 days. The correct answer is D. The correct answer is a 20-day notice of claim deadline, as Wyoming law requires written notice within 20 days of an accident or the start of treatment. Reason A is not correct. A 10-day window is shorter than the statutory requirement and thus insufficient. Reason B is not correct. A 60-day time frame exceeds the notice requirement stipulated by law. Reason C is not correct. A 30-day period refers to proof of loss deadlines, not notice of claim. Question 81. After receiving a claim denial letter dated April 1st, Mary filed an appeal on May 15th. According to Wyoming law, how long must a policyholder have to submit an appeal following a claim denial? A. 60 days from the date of receipt. B. 30 days from the date of receipt. C. 90 days from the date of receipt. D. 180 days from the date of receipt. The correct answer is A. The correct answer is 60 days because Wyoming statutes require insurers to allow at least a 60-day appeal period after a claim denial is received. Reason B is not correct. This is too short. Wyoming law mandates a longer appeal window. Reason C is not correct. This exceeds the statutory maximum appeal period under Wyoming regulations. Reason D is not correct. This duration far exceeds the time frame required by Wyoming statute. Question 82. Samantha's Wyoming individual health policy lapsed for non-payment, and she returned a signed reinstatement form with a statement of good health 2 weeks before suffering an injury. The insurer has neither approved nor denied the reinstatement. Under Wyoming law, when does coverage resume? A. On the date the application is signed. B. On the date of insurer's written approval. C. If not denied within 45 days of application. D. After a 31-day probationary period. The correct answer is C. The correct answer is that coverage resumes if the insurer does not deny the reinstatement within 45 days of application, per Wyoming statute on conditional reinstatement. Reason A is not correct. Wyoming law conditions reinstatement on insurer action rather than solely on signing the form. Reason B is not correct. Coverage does not await formal written approval if no denial occurs within the statutory period. Reason D is not correct. There is no additional probationary period specified beyond the insurer's decision window. Question 83. Under Wyoming's mandated accident and health coverage, what is the maximum number of hours of diabetes self-management training that must be covered within the first 2-year period following initial certification of need? A. 6 hours. B. 8 hours. C. 10 hours. D. 12 hours. The correct answer is C. The law requires coverage of up to 10 hours of diabetes self-management training in the initial 2-year period. Other hour limits do not meet the statutory threshold. Reason A is not correct. This option understates the required minimum hours of training. Reason B is not correct. This amount is below the statutory requirement for the initial period. Reason D is not correct. This exceeds the maximum hours the statute mandates. Question 84. According to Wyoming's mandated benefits for mammography, how often must insurers cover screening mammograms for women ages 40 through 49 and for those 50 and over? A. Annually for women 40 and older. B. Biennially for women 40 and older. C. Every 3 years for women 40 and older. D. Biennially for ages 40 through 49 and annually for 50 and over. The correct answer is D. Wyoming law specifies that coverage must be provided every 2 years for women ages 40 through 49 and annually for those aged 50 and above. Reason A is not correct. This does not reflect the extended interval permitted for women under 50. Reason B is not correct. This fails to provide annual coverage for women age 50 and above. Reason C is not correct. No triennial interval is allowed under the mandate. Question 85. Under Wyoming's Autism Spectrum Disorder Treatment Mandate, what is the annual maximum benefit limit for applied behavior analysis services? A. $10,000 per year. B. $50,000 lifetime. C. $35,000 per year. D. Unlimited with prior authorization. The correct answer is C. Wyoming statute caps coverage of applied behavior analysis for autism at $35,000 per policy year. Neither lower annual amounts nor lifetime caps meet the requirement. Reason A is not correct. This amount is below the mandated annual benefit limit. Reason B is not correct. The mandate specifies an annual cap, not a lifetime limit. Reason D is not correct. Unlimited coverage is not permitted under the statute. Question 86. Pursuant to Wyoming requirements for adopted child coverage, coverage for a newly adopted minor must become effective on which date? A. Date of final adoption decree. B. Policy anniversary following adoption. C. Date of placement for adoption. D. Date of completion of pre-placement evaluation. The correct answer is C. Wyoming law mandates that coverage for an adopted child begins on the date the child is placed in the home for adoption, even before the final decree. Reason A is not correct. Coverage must begin earlier than the final decree date. Reason B is not correct. Coverage does not wait until the next anniversary. Reason D is not correct. Coverage is triggered by placement, not evaluation completion. Question 87. After obtaining an individual major medical policy in Wyoming, Maria enrolls in an outpatient chemical dependency treatment program for alcohol dependence. She discovers that her policy's copayment and coinsurance for chemical dependency treatment differ from those applied to her physical illness benefits. Under Wyoming's mandated benefits requirements, which statement about her chemical dependency coverage is correct? A. The policy may impose a separate lifetime maximum dollar limit specifically for chemical dependency treatment benefits. B. The policy must apply copayment and coinsurance terms to chemical dependency treatment that are no less favorable than those applied to physical illness benefits. C. The policy can require a 90-day probationary waiting period for chemical dependency benefits distinct from physical illness waiting periods. D. The policy may limit outpatient chemical dependency visits to 10 per year, while allowing 30 per year for physical illness services. The correct answer is B. This option is correct because Wyoming law requires that chemical dependency treatment benefits be provided under terms, conditions, and limitations no less favorable than those for physical illnesses, including copayment and coinsurance. Reason A is not correct. A separate lifetime maximum for chemical dependency would violate the parity requirement that limits and maximums be no less favorable than those for physical illnesses. Reason C is not correct. Imposing a distinct longer waiting period for chemical dependency would conflict with the requirement that waiting periods be applied equally to all covered benefits. Reason D is not correct. Limiting outpatient visits for chemical dependency more strictly than for physical illness contradicts the no less favorable treatment mandate. Question 88. Under Wyoming statute requirements for HMO Certificate of Authority applications, What minimum net worth must an HMO applicant demonstrate? A. $1,500,000. B. $1 million. C. $500,000. D. $2 million. The correct answer is A. The correct answer is $1,500,000 because Wyoming law sets the minimum net worth requirement for an HMO certificate of authority at $1.5 million to ensure financial stability. Reason B is not correct. $1 million does not meet the statutory threshold set for HMO applicants in Wyoming. Reason C is not correct. This amount is below the statutory minimum required for financial stability under Wyoming HMO rules. Reason D is not correct. $2 million exceeds the minimum requirement, but the law specifically requires only $1,500,000. Question 89. According to Wyoming law, an HMO must deliver the evidence of coverage document to new enrollees no later than how many days before the coverage effective date? A. 5 days. B. 10 days. C. 14 days. D. 30 days. The correct answer is B. The correct answer is 10 days because Wyoming regulations require that evidence of coverage be delivered to enrollees at least 10 days prior to the coverage effective date to allow sufficient review time. Reason A is not correct. 5 days before the effective date does not meet the minimum review period mandated by law. Reason C is not correct. 14 days exceeds the minimum requirement, but is not the specified time frame in Wyoming statutes. Reason D is not correct. 30 days is longer than required and is not the statutory standard. Question 90. Under Wyoming provider network adequacy standards, at least what percentage of enrollees must have access to a primary care provider within a 30-minute travel time? A. 75%. B. 80%. C. 100%. D. 90%. The correct answer is D. The correct answer is 90% because Wyoming regulations stipulate that no fewer than 9 out of 10 enrollees must be able to reach a primary care provider within a 30-minute travel time. Reason A is not correct. 75% falls short of the required majority specified by the regulations. Reason B is not correct. 80% does not fulfill the statutory minimum standard for network adequacy. Reason C is not correct. 100% is unattainable under the regulation and exceeds the mandated threshold. Question 91. A network provider submits a clean claim for covered outpatient services to an HMO on January 1st. The HMO received the claim and has taken no action as of February 5th. According to Wyoming prompt pay requirements for HMO claims, by what date must the HMO pay or deny the claim to remain compliant? A. Within 30 calendar days after receipt of the claim. B. Within 45 calendar days after receipt of the claim. C. Within 60 calendar days after receipt of the claim. D. Within 15 calendar days after receipt of the claim. The correct answer is A. Under Wyoming statute, HMOs must pay or deny a clean claim within 30 calendar days of receipt. Failure to comply may result in interest penalties for late payment. Reason B is not correct. 45 days is longer than the statutory 30-day deadline for HMOs and is not applicable under Wyoming prompt pay rules. Reason C is not correct. 60 days exceeds the maximum 30-day period specified for HMOs and applies to different types of insurers in some jurisdictions. Reason D is not correct. 15 days is too short and typically refers to claim acknowledgement periods rather than final payment deadlines for HMOs. Question 92. What is the maximum income limit expressed as a percentage of the federal poverty level for eligibility in the Wyoming Children's Health Insurance Program, CHIP? A. 100% of the federal poverty level? B. 185% of the federal poverty level? C. 200% of the federal poverty level? D. 250% of the federal poverty level? The correct answer is C. The correct answer is 200% of the federal poverty level, as Wyoming CHIP covers children and families with incomes at or below this threshold. Reason A is not correct. An income limit of 100% of FPL corresponds to basic Medicaid eligibility rather than CHIP. Reason B is not correct. A limit of 185% of FPL is used in some other states, but is lower than Wyoming's CHIP threshold. Reason D is not correct. A limit of 250% of FPL exceeds Wyoming's maximum threshold for CHIP enrollment. Question 93. Under Wyoming CHIP regulations, what is the required waiting period after termination of group health coverage before an eligible child can enroll? A. No waiting period. B. 30 days. C. 60 days. D. 90 days. The correct answer is D. The correct answer is 90 days, which is the mandated uninsured period following loss of group coverage before CHIP enrollment. Reason A is not correct. There is a mandatory waiting period, so enrollment cannot occur immediately. Reason B is not correct. A 30-day interval is shorter than the state's required period. Reason C is not correct. A 60-day interval is shorter than the mandated waiting period. Question 94. According to the Wyoming CHIP cost-sharing sliding scale, families with incomes between 200% and 235% of the federal poverty level are required to pay what monthly premium? A. $10. B. $35. C. $25. D. $50. The correct answer is C. The correct answer is $25, which is the monthly premium set for families whose incomes fall between 200% and 235% of FPL under Wyoming's CHIP sliding scale. Reason A is not correct. A $10 premium applies to a lower income bracket under the sliding scale. Reason B is not correct. A $35 premium corresponds to incomes above 235% of FPL. Reason D is not correct. A $50 premium exceeds the maximum required for the specified income range. Question 95. The Wyoming CHIP program is using the Blue Cross Blue Shield standard option under the Federal Employee Health Benefit Plan as its benefit design benchmark. The program wants to add expanded dental and vision benefits above the benchmark. Under federal regulations, how can these additional services be added? A. They cannot be added. Benefits must exactly match the benchmark with no additions. B. They may only be added if actuarially equivalent benefits are removed elsewhere. C. They must be added without cost to enrollees using federal CHIP funds. D. They can be added if 100% state funds pay for the wraparound benefits. The correct answer is D. Wraparound services beyond the benchmark package can be offered only if the state covers their full cost with state-only funds while preserving the benchmark benefits and cost sharing. Reason A is not correct. This states no additions are allowed, but wraparound services can be added with state-only funding. Reason B is not correct. This implies benefit removal is required, but federal rules allow addition without removing services when state funds are used. Reason C is not correct. This suggests federal CHIP funds cover wraparound benefits, but federal funds only support benchmark services. Question 96. Under Wyoming statutes regulating accident and health insurance, when must an insurer furnish the long-term care insurance shopper's guide to a prospective policyholder? A. At the time of policy delivery. B. At or before the time of application. C. Within 10 days after policy issuance. D. During the free look period following delivery. The correct answer is B. The correct answer is that the statute mandates delivery of the shopper's guide at or before application to ensure applicants receive standardized information before purchase. Reason A is not correct. Furnishing at delivery occurs after the application stage, missing the requirement to inform before purchase. Reason C is not correct. The 10-day post-issuance timeframe is not specified by Wyoming law for the shopper's guide. Reason D is not correct. Delivery during the free look period is too late as the guide must be provided prior to or at application. Question 97. According to Wyoming law specific to long-term care insurance, what is required regarding the suitability questionnaire when issuing a new policy? A. It must be completed and signed by the applicant and agent before policy delivery. B. It must be submitted to the Wyoming Department of Insurance prior to policy issuance. C. It is optional unless the policy replaces existing coverage. D. It must be completed during the free look period post-delivery. The correct answer is A. The correct answer is that the statute requires a completed, signed suitability questionnaire before delivery to document suitability and protect applicants. Reason B is not correct. Filing with the department prior to issuance is not required by the suitability rules. Reason C is not correct. Suitability is always required, not only in replacement scenarios. Reason D is not correct. Completion during the free look period occurs after delivery, which does not satisfy the pre-delivery requirement. Question 98. A 58-year-old applicant in Wyoming is applying for a long-term care insurance policy. The agent offers a 3% simple inflation protection rider, which the applicant declines. Under Wyoming statutes for LTC standards, which statement is correct regarding the minimum inflation protection offer? A. The agent complied because a simple inflation benefit satisfies the state minimum for applicants under age 60. B. The agent must offer a compound inflation protection option of at least 5%, so the simple 3% option alone does not meet the minimum requirement. C. No inflation protection offer is required for applicants over age 55 under Wyoming regulations. D. The agent only needs to offer a guaranteed purchase option instead of inflation protection. The correct answer is B. The minimum required offer under Wyoming LTC regulations is a 5% compound inflation protection rider. A 3% simple option is insufficient. Reason A is not correct. A 3% simple increase does not satisfy the state's required minimum of 5% compound inflation protection. Reason C is not correct. Inflation protection must be offered regardless of applicant age under Wyoming rules. Reason D is not correct. A guaranteed purchase option does not fulfill the mandatory inflation protection offer requirement. Question 99. Under Wyoming statutes, how many calendar days in advance must an insurer file each form of health insurance advertisement with the commissioner before its initial use? A. 14 calendar days. B. 30 calendar days. C. 45 calendar days. D. 60 calendar days. The correct answer is B. The correct answer is 30 calendar days because Wyoming law requires insurers to submit each advertisement form to the commissioner at least 30 calendar days prior to its first use to allow sufficient time for review. Reason A is not correct. The 14 calendar day period is too short. The statute specifies a 30 calendar day filing requirement. Reason C is not correct. The 45 calendar day period exceeds the mandated time frame for initial advertisement submission. Reason D is not correct. The 60 calendar day period is longer than required by Wyoming statute, which sets a 30-day requirement. Question 100. An accident and health insurer in Wyoming plans to feature policyholder testimonials in its brochure. Under Wyoming advertising rules for health insurance, What additional step must be taken to ensure compliance when the highlighted experiences may not reflect typical outcomes? A. Require each testimonial provider to execute a notarized authenticity affidavit. B. Obtain and publish supporting medical records for each testimonial. C. Attach a full outline of benefits and exclusions alongside each testimonial. D. Include a clear disclaimer that the results may not be typical of all policyholders. The correct answer is D. The correct answer is to include a disclaimer if testimonials portray atypical experiences, ensuring consumers are not misled about average outcomes. Reason A is not correct. Requiring notarized affidavits goes beyond Wyoming's rule, which focuses on transparency rather than legal notarization. Reason B is not correct. Publishing medical records would violate privacy rules and is not required for testimonial use compliance. Reason C is not correct. A benefit outline is a disclosure requirement, but not specifically tied to testimonials that may misrepresent typical outcomes. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.